Good morning, Story Trading VIPs. It's the last trading day of the year, Friday, December 30th. A very quiet morning. There's absolutely no news for the first time ever. Really, no news on the watch list of any of the stocks we follow. Today is the last day. If you want to sell something for tax loss selling, just keep in mind you can't buy it back for another 30 days. That that being said, market opens Tuesday. We're closed on Monday, 3-day weekend. You can see QQQ SPY is down. I don't know what's going to happen on Tuesday, on January 3rd, I guess it is. But I continue to be really worried, primarily because of what just happened with Tesla and what I think can happen with Apple. Between possible margin calls and contagion that can come from Tesla and Apple, which I think looks imminently poised to hit 112. But is there a chance to get like a January rally first? Yeah, I suppose there is. I remember last year, January 1st, and it was so easy to predict. The first day of the year, January 2nd, the market crashed. And the reason it was easy to predict was because people were sitting on huge, huge gains and they wanted to defer the taxes that they owed. They wanted to defer the income they get from selling a stock. So you saw stocks not being sold at the end of December last year, the ones that were up huge, right? And then especially the mega caps. And then January 1st, boom, they all went down, right? So tax season has a lot to do with the dynamics around here. So you can say the opposite should be in effect this year, right? No one's really sitting on huge losses. There's been tax loss selling probably the last few months. I mean, no one's sitting on huge gains. There's been tax loss selling the last few months. So perhaps you're supposed to get a rebound on Tuesday. That may still be in effect, but there's so many moving parts. There's economic data coming, and there's when are the margin calls from Tesla going to hit a critical point? When is it going to start snowballing? We don't know exactly when, but I really think, listen, nothing is 100%. That's why you diversify and you have different allocations. But I'm of the mindset that in Q1, I mean, this to me looks, honestly, it looks like it's going to spike down to 112. I don't know, but let's just say Q1. Give ourselves 3 months for this to make a move to at least 112. We looked at the history on Wednesday afternoon on our shared collaboration Zoom. We looked at the stock history of Apple during the dot-com bust and the financial crisis. And in both cases, it was really the only times the stock went below the 200-week moving average. And in both cases, it moved I think it was 23% below and dot-com bust, and I think maybe 12% below in the financial crisis. So if you use those at a gauge and you say, like, let's say fundamentally this recession won't be any worse than those, then you come to about an $85 to $100 possibility for Apple. But, we also have the pre-COVID high sitting here at 81. I mean, this move up has been unprecedented. And, kind of think of it as like a rubber band. When you stretch a rubber band like this, it goes so far and then you let go, it compresses. It doesn't go back to the original position. It like compresses and goes like this if you do it in slow motion, right? So like that's kind of what I feel may be coming. So I honestly wouldn't be surprised if this move down is going to be worse than what we saw in the financial crisis and .com. I wouldn't be surprised if Apple makes a move at some point to the pre-COVID high of 81, which would be the biggest move below the 200-week moving average pretty much ever. I think that's a possibility. I think that's in the card. So, position this how you like. We're still in red alert for the fund I'm advising for. And speaking of that fund, we're at the end of the year. There's nothing to talk about in terms of company catalysts this morning. So I want to take a minute and talk about, what we can do better, what I could do better going forward in 2023. It was definitely a tough year for me, primarily because I was DRIO. My largest position is down like from $18 to $4. So it's going to be hard to make money in a year like that. So, but the thing that we've discovered here the last like 6 months or so is the process we have for the pre-market show, which is really coming to fruition with all the collaboration we have in the community. It's not just me, right? I have a lot of knowledge I get from the collaboration in the community. I have stocks I put on the watch list from the community, and I have an understanding of the fundamentals because of the discussions in the community. And then we just sit on it on the watch list and we wait for catalysts. And then with that understanding, we can kind of predict what that stock's going to do for the day. That process has been unbelievably, at some point, like we got to keep a track record of the morning picks because of the water. And what I could do better is take advantage of that. I sit here and give you these awesome picks, like what was the last one that was huge was Generac, and I didn't do anything about it personally myself. I'm like at 92. I was pounding the table 2 days in a row. I said 103 is your target. Went to like 102.88. I mean, come on, right? And this has happened time and time and time again, but I haven't personally benefited from that. So one of the things I want to do this year is maybe make a nice big allocation in my portfolio just to play our own plays from the pre-market show. That's something we could do better on, and we know it works because a fund has been formed because of it. One of our members in the community, Yosef, has been following the pre-market show for a long time and has made a great money with that. And a hedge fund is being born out of that process. Amazing, right? So we got to focus on what we do good rather than sulking and saying this is a terrible year and oh my god, I made a mistake holding DRIO for the whole year or was over allocated. We got to focus on what we did good and double down on that. That's what I'm going to try to commit to do for myself here and for the fund in 2023. That being said, let's take a look at some other stocks now. Tesla, I think there's a possibility it's bottomed at 110. But I also think that if Apple does do what I just said, and it happens fast in a rapid way with capitulation and margin calls at some point, if that happens, then all bets are off. And Tesla ultimately, I think the lowest it's going to get, I believe, is going to be that pre-COVID. It's not the pre-COVID high. What did I have? This level here, about 63. Yeah, is that the pre-COVID high? Yeah, 63, 65. I think that's your ultimate support. There's also support up here in 85. It's definitely possible that happens. So I don't have any Tesla on my trade account now, but I did establish a long-term position on my IRA from a value perspective, from an earnings perspective. And if you're looking out 5-10 years, which is at least the timeline for my IRA, I'm happy to own the stock here at 120. So I was loading up the last couple of days. It's now 5% position for me. Now, a couple new stocks I want to bring to your attention. GRIL. Now, this is something I'm putting out there for those of you who would like to research it and maybe let us know more of your findings. I did post a link during the day, but some of you may have not seen this. I became aware of this because they were on Benzinga yesterday morning, and then it hit like a huge account on Twitter that puts news out. And they just put the ticker GRIL and they linked to the Benzinga story. So I looked it up and there was an article yesterday. It says Muscle Maker crosses 100 million revenue milestone in first 45 days. So I saw that. And then you look at the market cap, 27 million. And then you look at the chart and it's like, oh my gosh, it's been up straight from like 40 cents. Maybe there's something there, right? Maybe this is not like, even though it's a penny stock, maybe it's not a pump and dump. Maybe there's something here. I think this is worth researching. I did pick up a trade position just based on that news and the technicals in the middle of the day yesterday, which I held overnight. But maybe there is something here. Putting that out there for the fundamental researchers in the room to look into. All right, I want to point out SABR. This was mentioned yesterday in the room by Tony. It's a play on what happened with Southwest Airlines with their computer systems, and this is a company that provides technology services to airlines that could help fix that problem for the future. So this made a move to the 20 DMA. I don't know. I'm not so hot on it moving up on a market red day. Speaking of the market, for a few days I was talking about some of these picks that we've had here, especially CTLP, Tableau, CTMX. I had mentioned that these have very strong relative strength, especially CTLP. And I'm like, all you have to do is wait for a green day and this thing is going to rocket. I mentioned that yesterday morning when it was a green day. So this indeed finally did rocket to 430, basically resistance over there. So, that's relative strength on red days. That's what you look for. So then when you have a green day, you just jump on those stocks that had relative strength on red days. That's a strategy that works really, really well. So that's still a swing trade target up there at the 200 DMA. So, but SABR, I don't know it well enough to know, and I haven't studied it, in terms of relative strength, really, to know if this is something that's going to have that dynamic. But, I mean, every stock was up yesterday, like 5%. So I'm not sure I'm not sure. Maybe Tony's right, but I'm not sure that's related to what was going on at Southwest Airlines. I do want to point out TPCS, and Mark Gomes' favorite. I've been accumulating this over the last 3 days. I finally like it. I mean, I've been in and out over time, but I really didn't like it. TPCS, everything's starting to come together. Fundamentals, catalysts, and very importantly, uplisting starting to look good, and it's the right sector out of the new FANG stocks, aerospace over here. So, or defense aerospace. So, this is looking good. Very happy with picking up and accumulating TPCS over the last 3 days. All right, Tableau, I just mentioned it blew up there. It's right near that target, though, that we had at the 200 DMA. Now, fundamentally, this looks very cheap, and the RSI is still very low. So I think there is a chance this thing breaks out above the 200 DMA and makes a run to like $3.50 to $4. That opportunity is there. But again, I think it's not going to do it in a red market. Just watch for continued relative strength. Maybe have opportunities to buy on pullbacks in the market, and then you can sell on green days when the thing pops. So that's the strategy, I believe, for Tableau. All right, DRIO, as I just said, been a huge disappointment. One of the big reasons I did not have a positive year in 2022. But I've not sold a single share, and I averaged down, and I'm still thinking this is going to work out. I think there's a possibility this stock can double in the first quarter. There's a lot of huge catalysts pending, and that based on signals from management, I think these huge catalysts have a chance of all hitting in the first quarter. That's Aetna launch, that's a new strategic partner, and that's an investment from Sanofi. There's also other regional healthcare plans on deck that they're trying to get signed. I think a lot of these can happen over the next couple months. So I'm holding on tight to this, and it could make a big move. But if the market crashes, it could go to the twos first. Again, all right, be aware of that risk. All right, CTMX. So we have a catalyst coming up in 2 weeks, not next week, the week after 175 target on that. And, the fundamental tailwind is Regeneron. So we do multiple pillars here. We have the fundamentals, we have the catalysts, and we have the technicals we're working on. Clearfield, again, be aware of the possibility in a crash of $87 support. I'm really happy to have this as my second largest position. Earnings are actually soon, believe it or not. When is it? January 25th. Is that accurate? I thought it was early February, but I guess it's in a few weeks. Okay. So this is going to be hopefully something that's going to help out our portfolio big time in a few weeks when we expect a nice earnings report. RELL earnings report is on Wednesday. We pointed this out yesterday on the morning show. Again, combining multiple pillars. You got the fundamental tailwind of great earnings and good value. You had bouncing off the 20-week moving average, the technicals. You had the catalyst of the earnings date being reported yesterday, and that trade worked out using our multiple pillar strategy. All right. So that's about it. We're watching, hoping XXII has a good year. FREY, I mentioned yesterday, maybe at a level where it makes sense to get a trade position in here. Historically, this is where it bounces. I do want to mention two additional stocks, not new. I mentioned one new stock there. It was a GRIL. But I want to mention now two stocks that we're going to have presentations most likely in January. I've been going back and forth with management. One of them is MSOS. MSOS, we're going to have management of this ETF present to us probably sometime in January. So get ready for that. Probably going to be in the third week of January. We'll get that confirmed very soon. And then ASUR, this is a stock that came to our attention from someone on the board of directors of Clearfield, actually, who saw our interview and was very impressed with the interview we did. And this guy on the board of directors of Clearfield also has some sort of board position or some sort of relationship with ASUR. And he's like, man, these story trading guys are great. Let's give them another stock. And I want the CEO to present over there, ASUR. So probably we're going to have the CEO of ASUR present to us. I don't have a position in this yet. I just wanted to put that on your radar if you want to start researching it. It's obviously had a great run. I think there was some good news catalysts in here, which has been driving that. So you can take a look at that stock as well if you want to research some new stocks here for 2023. And with that, that's all I got for today. Again, no news catalyst. And let's see if anything snuck in while we did this show. No one's going to post news on the last day of the year. All right. So, guys, have a great day. Have a great new year, a good weekend, and we'll continue with our collaboration in the rooms. Thanks for joining.